hello to everyone. My name is Sebastian Wiesel, and let me quickly introduce myself. Then I hand over to Nico, who will introduce himself, and then Nico takes over the first part of the presentation, and then at some point I will jump in and do the second one, and at some point then Nico will jump off because he has a important engagement. So, a couple of words to myself. My name is Sebastian Wiesel. I work at Bank J. Safra Sarrazin for about 6 years in the ESG space. And I try and build analytical solutions that deliver ESG analysis on a scale. So we have to look at a lot of companies. So it's important for us to do this in a quantitative way that is scalable actually, and then enhance it also with more in-depth research than on a case-by-case basis. And next to my role as an ESG data scientist, I also cover the sectors of information technology and telecommunication. That's why later on we will quickly do a water-related IT example, but I think you can easily transfer this into the material space. And then I hand over to Nico now.
Hi together. It's also a pleasure from my side to welcome you and to be on board. Some words to myself. I would say I'm a sustainability specialist, working on within that space of sustainability for like roughly around 12 years now. Been with the bank for 2 years now as an ESG analyst, working very closely together with Sebastian. Next to the specialists on the sectors materials, industrials, and healthcare. I'm also more from a, would say, qualitative side in the lead of our methodologies when it comes to our sovereign ESG rating, the topic on biodiversity, SDG alignment, as well as third-party ESG fund researchers. 2 words on our employer. I think that's probably also quite interesting to know for you. Bank J. Safra Sarrazin is one of the probably earliest adapters in terms of ESG and sustainable investing. We now have a history of more than 30 years within that space. We're definitely one of the leaders, and would say still are in Switzerland. And our first sustainable mandate actually goes back to 1989 already. So quite a lot of the bank were around also before all the data and methodology service provider came along. And obviously before that, it was really hands-on work. And nowadays it's a little bit more kind of going into the quantitative data side combined with the qualitative view. But yes, we're extremely fortunate to work here and doing that job. We have a fairly big team for our bank of 9 people working dedicated to sustainable investments. Now let me jump to the next slide. What we are trying to do today is give you a really hands-on approach how to do an ESG risk analysis of a company. This is again really hands-on. It's probably it's a little bit simplified, I'd say, but I think if you take this approach, you will end up with a very solid and good result in a decent amount of time. That's obviously always the tricky part, because as you know, it's the same as with financial analysis. You can always go deeper and dig deeper, but the question is, do you add value by that? We split the approach up in 4 different steps. On the first step, we'll try to figure out what ESG issues are relevant / so-called material for a certain company. In the second step, we'll try to figure out which ESG data proxies can be used for the material ESG issues. On the third step, we'll show you how to collect qualitative and quantitative data for that. And then in the step 4, it's all about condensing the whole research into a usable insight. When we look into sustainability and different sustainability issues, next to just the three pillars, E, S, and G, there's obviously a huge list of potential topics, and I'd even say taxonomies you could use. Here on this page, you see a sample of potential issues. And it really depends also on what methodology, what data provider, what scientific methodology as well are you using. They're sometimes called differently and sometimes are summarized differently. What is important to understand is in the first step of this material issue is what we try to figure out is what is actually a relevant key issue or sustainability issue for a company. Let me give you an example. If you, as your case is as well, in the material space, or for example, also in industrial space, and you have a production facility which uses a lot of energy, most likely greenhouse gas emissions is going to be one of your relevant topics, of your material topics. If you're a mining company, for example, and you lose a lot of chemicals, and hence you also need to get rid of these chemicals at some point, waste and hazardous materials are probably a really relevant topic for you as well. On the other side, when we look, for example, in the social, to give you an example, if you're Walmart and you have thousands to millions of employees, labor practices, so basically how you pay your people, how you treat them, what contract do they have, and so forth, is going to be extremely relevant, because if the broad majority of your employees not going to work at some point anymore and goes into strike, it will cost you quite a lot of money. Another good example, which I think is a little bit more interesting to think about and not so straightforward, is the so-called issue that's called access to medicine. So for many pharmaceutical biotechs and some other healthcare companies, access to medicine as access to new markets, being present in emerging markets, not just for simply doing good, but also being ready there to open new markets and be early stage in these markets is extremely a relevant topic also for the financial bottom line. And obviously, when it comes to governance, we have the three, would say, main key issues. You look at the board structure, and the people within the board. You look at the compensation practices, if they're aligned with your shareholders' interests, and you look at the ownership and the shareholder rights. And then you have some additional topics in governance, which I'd say are all more or less a little bit around business ethics and competitive behavior. It goes a lot into how you deal with corruption, how you deal with anti-competitive behavior of your employees / your company itself, how you manage them, and so forth. When we look a little bit closer into a definition, and now we're talking about financial materiality, is at this concept. So to just recap the whole thing into one slide, is that we're trying to figure out what issues are impacting or having an impact on the financial, economic, or reputational, legal aspects of the company you're looking at. So basically, what can have an impact on the financial bottom line of your company. Now, just a slight, maybe interesting, but for the use case, let's say not so relevant, but nevertheless, I still want to give it up, excursion, a theoretical excursion, which is at the moment quite often in the news as well, is that the differentiation between just a single materiality, where you look at what the ESG issue has an impact on the company, so purely the financial materiality, to this called framework, which is called double materiality. This came up or is coming up more and more on the one hand side due to regulation. This is from the European Union Non-Financial Reporting Directive, which looks at the double materiality, but it also comes up more and more when we talk about impacts or potential impact or outcome of sustainable investments in the real world. There are lots of articles around at the moment which are extremely critical about ESG and sustainability investing and so forth, exactly because the impact on the real world is not necessarily proven. And this has a lot to do that the standard ESG over the last 5 to 10 years focused mainly on this financial materiality. So what you try to figure out is what key issues, for example, climate, have what effect on the company and how does the company need to manage them, ideally to have to not being negatively or even being positively influence the financial bottom line of the company. It did not necessarily focus on what impact a company has on the topic. So in this case, again, climate. These are obviously related. So if a company has a very high CO2 footprint, for example, when it comes to climate, it's fairly easy to say that this topic, though, the CO2 footprint will be financially relevant for the company. So it goes over in this dotted arrow you can see in the middle to the financial materiality, but it does not necessarily need to be the case. Really easy example to think through is take a company in Europe, in the US, having a heavy CO2 footprint. Hence, because it's based in the US or in Europe, it is already regulated. It most likely will get regulated much higher in the future. Society, consumers, and so forth have higher expectations when it comes to climate. So the costs for the company is already high and will increase most likely in the future much more. If you're based in other countries where climate change is not a relevant topic for regulators or in politics or even in society, the transfer of the impact you have with the same footprint to what financial materiality is not the same. Hence, you will have with the same footprint in another country a lower financial materiality of that topic just because you're based in another country. Now, jumping back more again to the hands-on approach, leaving the excursion a little bit on the side. There are 3 different sources where you can figure out what issues are relevant or material for a company. That's on the one hand, you look at the company themselves. Quite a lot of them do so-called materiality maps or assessments. We'll have a look at one example in a minute. You can look at different ESG research houses. They do the same. Again, also here, we'll have a quick look at the Refinitiv way of doing that. Or there are also quite some sustainability frameworks out there, and we're going to look at one of the probably the most important one as well. Now, the example of figuring out the materiality, looking at what the companies themselves think is relevant. This is example Sealed Air. I will give you some additional information on the company in a second. But Sealed Air is in the material space. It produces mainly packaging, plastic packaging. And what a company is doing quite often and also showing it and disclosing it in their sustainability reports, they take different sustainability issues and rate them by importance from their perspective. So as you can see here on the x-axis. And on the other hand, they go out to all relevant stakeholders and ask them the same questions, and then you end up with such a map. And hence you can see which of these issues are more relevant for the company and which ones are less, and also what stakeholders think differently from the company. I think that's a really good source of looking and figuring out the materiality. Take everything you get from a company with a pinch of salt. It's always the company which publishes it, hence it always has some certain interest behind, and it always depends how good the company is actually doing their job, meaning the stakeholders' perspective, you would want to know who are the stakeholders, how are they related to company and so forth. But it's one good source. Another source, as I said, were different ESG data providers, one of which is the Refinitiv, which Sebastian's going to show you in a couple of minutes how to work with that tool. Also, they do have materiality matrices. As you can see on the right-hand side, we took two examples, one from the software and one from packaging, just to illustrate. And for example, there you can see the environmental pillar of the software, due to its lower footprint, environmental footprint in general, is obviously much, much lower in terms of weight compared to the one of packaging, where the environmental footprint is higher. And hence the weight of these different pillars and issues are put differently. On the left-hand side, you can read that by yourself a little bit later on, but you see on the left-hand top side where the materiality matrix comes into account to give the different categories and different issues different weights. And this most often is the case when you do that on a sector/industry level. The last source of it is the Sustainability Accounting Standards Board, SASB. There are others out there which are similar, for example, GRI, which goes more into sustainability reporting, and numerous others which you can actually have a look at. We think that the SASB is probably one of the most prominent and one of the most highest, with one of the highest quality, and it's really easy to look up. We already, here on the right-hand side, you have the example of container packaging sub-industry, and they give you some information on which key issues or general issue category, as they call it, are relevant for this sub-industry. SASB, a little bit as a background, it's again probably one of the most important ones. It was founded 2011, and during the years it was supported as vice chairman, for example, by Michael Bloomberg, or also by Mary Zafiro, which was ex-SEC chairman, and hence it literally came from the idea of a sustainability standards, sustainability accounting in the US, really closely to the SEC. To give a standard framework around there, and they're still working on that. Now let's jump into the two case example we brought to you. I already mentioned one of my company / from the sectors I cover, materials, which I think is closest to the one you have, if I'm informed correctly. Sealed Air is a US packaging company. It offers mainly packaging material, some system and equipment as well, and services. It is the probably two most known products are on the one hand the bubble wrap you have in many packaging from online retailers you get, and on the other hand it's the so-called cryovac, which is basically plastic packaging for food. So like the bags where you put food in and take the air out, these are like the most relevant and prominent products of them. In terms of size, they have 16,500 employees, roughly around there. They're present in 115 countries. They have roughly 5 billion of revenues and somewhere around 1 billion of adjusted EBITDA. I'm going to focus on only one of the key issues. Sebastian is going to take afterwards bring in another example from another key issue, and we just go through what we actually these 4 steps on this example. I took greenhouse gas emissions as the key issue to look at. Greenhouse gas emission, as you can imagine, is the irrelevant topic when it comes to climate change. It's about, when you look into this issue, it's about how the company is actually set up also for a low carbon future, what their footprint is and so forth, and what they're doing around there. As you can see on the SASB side, but also from different data providers, you'll find that this greenhouse gas emissions is a relevant topic for the company. You can also see that on the company's materiality metrics himself. Just logically speaking, also makes sense. The topic is very high on society's, consumers, and as well as politics / regulatory agenda. And the company does have a substantial footprint. It uses quite a lot of energy, and especially also combined with its plastic product, when it comes to a life cycle of the product, this is also rather relevant. So it's let's say with this combination, it's easy to figuring out that this can be or is a material topic for the company. So after you basically figured out how important the issue is, and maybe also in terms of what weight you want to give to the issue, or what the weight the data provider is giving to the issue, you want to figuring out what are the different data points or proxy data you can use to figuring out if the company is A, exposed, and B, how the company is managing this risk. And here I'll show you some different potential questions you can ask, potential topics, how you can go along when you look at greenhouse gas emissions from a company. We start on the left-hand top side. The first thing you obviously want to do is, what is the greenhouse gas footprint of that company? You want to figure that out. How does it relate to the to peers, to industry peers, maybe also to the economy? Is it relevant or not? How big is it? But you also want to see already as a first thing is, does the company actually measure it by themselves? Do they disclose it? Disclosure is always extremely relevant to assessing if a company manages its key issues with high quality, because everything that obviously is not measured can't be managed, and everything that's not disclosed is always brings always some bitter taste with it, that it might be that they might want to hide a little bit. When it comes to greenhouse gas, this is relevant for you want to figure out if they disclose scope 1, 2, and 3. I'm not going to go into depth what this scope 1, 2, 3 actually means, maybe a little bit later on, especially on scope 3. But you want to see what footprint they're measuring, how they report. A really good source for that is the CDP disclosure. It's the so-called Carbon Disclosure Project. We'll have there is a link, you can go on that homepage. Most of the big companies where greenhouse gas is a relevant topic actually nowadays do disclose their data via the CDP. The disclosure itself is also rated by CDP. It gives you a good indication where the company stands there in terms of disclosure. And what you also want to figure out here, which obviously comes with the just general information, is again a little bit where the company is based. That goes back to the example I brought you. You want to figure out in terms of regulatory framework and consumers and society expectation, in which market are they present, where are they producing, and what the regulatory framework is around there on that topic, to give you an indication of how the exposure for this topic is within that company. Then you can actually go deeper. If you once established how big the footprint is and how good they are in disclosing it, you want to ask the question, okay, now what are they doing about it? What have they done? How is the whole setup? And go a little bit into there. On the one hand, you can ask, do they have reduction targets? And not just simply, and that is really relevant, you don't just want to see, okay, cool, they have some reduction targets, but you actually want to assess these reduction targets. We've seen over the last 5 years quite a shift there, because it's easy to come up with some reduction targets if you can set your own baseline, if you can set your own reduction targets. But they don't necessarily need to mean anything in terms from a qualitative perspective. So the first thing is you want to figure out, do they have a reduction target? Do they publish it? And then furthermore, are they science-based? There's a really good initiative called Science-Based Target Initiative, which basically companies work together with them, and they help companies to set science-based Paris-aligned targets, and then also give them the stamp if the company has set such targets or not. It's not as big as CDP yet, but it's growing quite fast, and quite some relevant players and big companies with greenhouse gas emissions are on there and set themselves targets. So it's always a good thing to check this one, and it gives an easy indication if the reduction targets actually mean something or not. Moving to the next step, you obviously don't want only to ask, do they have targets, but you also want to know, can they actually do what they promised? Do they have a track record on that? So you want to look at the emissions over the last couple of years, how they developed, and also especially if they already set target and if they reached them. And then next, the other three blue boxes literally go into the measurements. What concrete measurements does the company take into account? On the one hand, do they use clean energy? How they use clean energy? Do they produce them themselves? What mechanism they use for clean energy? How big is their energy consumption in general? What measures do they take to bring down this energy consumption in terms of maybe new technology, investments, and so forth? And then also even one step further is, do they do carbon offsetting? Maybe they have to from a regulatory perspective. Do they invest, or have they already some thoughts about carbon capture? And this obviously goes quite often together with the reduction targets, because quite some companies now, they have a net zero target, which normally only can be used with offsetting, and sometimes even with carbon capture. So that's a thing you want to look at as well. And then last but not least, you want to look at the, I would call it more governance side of the topic. So what is the strategy in general? Who is responsible for the topic within the management, within the board? What are the incentive programs? It's always nice to have a sustainability officer somewhere, but depending where it is based and who does it report to and who is responsible in management and board, gives you quite good indication. This is also improving overall in the industry, I'd say. 5 to 10 years ago, you have quite a lot of CSR departments within the communication departments, and you always knew exactly that it's not necessarily a lot of things they're doing. And it's not really relevant, but it's nice to talk about. Nowadays, quite often they report either directly to the CEO, sometimes even having a chief sustainability officer within the management, or as oversight by the board. And the same goes for remuneration and incentive programs for management and relevant employees. And last but not least, and it's always an easy task to check up on, but a really important and especially independent, everything else quite often comes from the companies themselves, with some third-party assurance or not, but the controversies you can look up even just on Google, and there are other research and providers which help you with that even more, is you want to check if the company has any controversies around that topic. Which on the one hand, obviously also gives you an impression how material this issue is, but it also gives you a fairly good picture on is the company managing this issue in a good or bad way. Now, I'm going to make this a little bit shorter, promise, but here is the same thing for sealed air, which I filled in for you. Most of it you can read by yourself. Really quickly, sealed air has a rather substantial footprint compared to the broader economy, as I already told you, because there's quite some energy-intensive production of their products, and especially, and that's what the so-called scope 3 footprint, so the footprint of their services and products, so the plastic, when it comes to all the materials you need to use to produce this plastic packaging, which is basically oil, but also then where it ends up in terms of landfills, or it's gonna at some point it's gonna be in it's gonna be burned in different countries. So all that together is basically kind of the scope 3 footprint of that company, and this is obviously extremely or quite big, as it is plastic. Again, on the one hand side, because plastic is based on fossil fuels, is produced by fossil fuels, and on the other hand, because it ends up most likely either in landfills, quite often also somewhere in nature, which doesn't necessarily mean a high greenhouse gas footprint, but probably a fairly bad biodiversity footprint. Or it is like in Switzerland we have here, most of our waste is basically burnt, but then again also produces greenhouse gases. So that comes in there. Sealed Air yet measures and reports all its greenhouse gas footprint already since a couple of years. I think it's the 7th year it actually discloses it also on CDP. It gets an A- rating, which is extremely well. It's a very long report and it's a very interesting report, CDP report you can read up on. Sealed Air has just published this year new greenhouse gas reduction targets, which are Paris Agreement aligned and also are from the Science Based Target Initiative aligned. And they give it a stamp of a 1.5 degree target. It has the net zero carbon emission by 2040 in their scope 1 and 2, so in their operations. They have also a really good track record in achieving their goals. They had goals until 2020, which they overachieved by, I think, 200%, which is good to see. They invest in clean energy production themselves, but they also use quite a lot, a substantial amount of renewable energy via certificates. They're brought down and further want to bring down the energy consumption. In terms of responsibility, board and management. So it's basically the CEO, which is all over the board, has the oversight of climate-related issues. And they have an interesting incentive structure around sustainability topics, where greenhouse gas is one of the most relevant ones. They do not have yet, nor any plans, as I could have read up on an internal carbon price, which is a pity and would be interesting to engage with the company on that. But they, on the other hand, do quite a lot of engagement with their key customers, so the key big customers in terms of packaged foods, but also with their suppliers of bringing down this scope 3 footprint of the materials they're using from the supply side, but then also later on bringing down the footprint on the recycling of that plastic. They do not have any offsetting, do not do any offsetting. They're not regulated in any carbon price system yet, and they do not have plans yet. On the other hand, they have this net zero carbon emission targets by 2040. So at some point they will have to. And fortunately, good for the company, they don't have any controversies whatsoever around that topic. Hence, this is the data collection. This is the example of the Science Based Target Initiative platform. Again, some slides back, there is a link to that. You can look up the companies and then you can see if the target is already set, if the target is already reviewed by a Science Based Target. As you can see here, it is reviewed and Science Based Target thinks this is a science-based 1.5 degree target. And it also a little bit goes into depth how exactly that looks like. And here the example of the CDP homepage, again, the link we gave you in early slides, and how exactly this looks like. Now, the last step after proxy data and data collection we've done is basically condensing this whole insight into a qualitative perspective, but most likely also, and that's again a little bit depending on if you use data and methodology providers, which already do that for you, but from a qualitative perspective, and if you have the time for one company, it's good to have a qualitative condensed summary of the key issue. I'm not going to read all through that. I think it's a fairly good summary of the greenhouse gas emission topic for Sealed Air. In general, really short, that's the bold part there. You could say, okay, the company faces a medium exposure to that key issue. It's obviously not one of the companies which burns coal or oil and gas directly, and has a huge exposure, but it has a relevant exposure when you compare it to the rest of the industry, the rest of the economy. It is doing, on the other hand, fairly good in managing these risks with different measures, strong reduction targets, and also when you compare the footprint to industry peers, is actually among the leading ones. And what you can also say is, and that's probably the most relevant part in this side, is that they are aware that the biggest impact and the biggest, let's call it, elephant in the room when it comes to greenhouse gas is not necessarily just their operational side, so how they produce their plastics packaging, but it's the scope 3 footprint, so all the footprint which is in the supply chain, so in the material they use, but also and downstream in their products they're selling. And they're really aware of that, and they have quite a lot of measures around that to reduce this footprint around there. And now I'm going to hand over for another example by Sebastian.
Okay, thank you. Before I start, I want to try to minimize. So I have okay, that's better. Good. So my case example, that's a company from the semiconductor space. So they produce microchips. And while this sector is not relevant to your investment case, I think the key issue which I will discuss, so the material ESG issue, water stress, that should be something which might be of interest to your investment case. So I think there is a good parallel here. So the issue of water stress, what is this about? It's basically asking the question, so if we would run into water shortages, would this negatively affect our the production of the company we are looking at? That is the basic question that we are trying to answer. And very shortly put, we have two aspects. One is the exposure. So where's the company located and what does it produce? Has it a very high water footprint, and therefore, is this central to the production? And then the other aspect would be the management. So what measures are in place to, if the company is very dependent on water, to reduce this dependency? And this question we will try to answer in the next slide. And we try to basically make the question tangible by using 7 proxy data points. Some are quite similar to the greenhouse gas data points. So one, also, we start here with disclosure. And the CDP does not only collect data on carbon, but also data on water. And you will find there a very good overview of companies that disclose their water risks. And this is also scored on the same legend. So A to C with minuses in between. And we will later see how this company scores. Maybe before I continue, one a quick excursus. Why is water stress important for the semiconductor industry? If you want to produce a semiconductor, so a microchip, you need plenty amounts of water. This is number one. And then number two, 90% of the global semiconductors are produced in Taiwan. And then number three, Taiwan this year suffered the biggest drought on record, and had big problems with water supply. And we see that there were water distribution conflicts later on. So water consumption target, that is a second data point that we use to approximate water stress. A good target for reducing your water consumption has one element is a concrete reduction target against a set baseline. So for a semiconductor industry, this can look like that. So our goal as a company is to reduce the amount of water per microchip produced by 10%, our baseline being the year 2018, for example. Then a second characteristic of a good target is a company should set site level targets and company level targets. So site level targets means for every factory that you have, you should set a separate target, because the geographical location of each facility determines very much what level of target makes sense or not. And then you should also aggregate this to top level and then set a target at the company level. Then, now I'm at the right side of the slide, top line. It's important to know where does the company have executive bodies that are making decisions in this area of topic. If you have this at a very low level of the hierarchy, then this would be a signal that this company does not really look into this topic. Then water efficient production processes. We want to know what concrete measures are in place for actually reducing water in the production process. Then, of course, the geographic location, that is a major factor that we try to assess. Then we need to quantify what is actually the water consumption. Has it trended downwards over the last couple of years? Has it trended upwards? And how does it look against the peers? And then again, also like in the GHG slide, we look at controversies which are in place. Okay, now after we have conceptualized our proxy data, we can go and fill this with actual data points. And I've done this here. I again start from the top left and then go right and then go down. So water risk disclosure, here I said it. This is a chart that shows the disclosure they disclose since 2018, started out with a grade of B. Sorry. Then in the follow-up year, they still have this rating of B. They managed in 20 to go up to an A, which is the highest score. And then in 21, they have disclosed, and the grade is still pending by the CDP. So I would assume maybe they are able to hold an A. If not, then I would adjust that. The water consumption target. So they have a very specific consumption target, which is to reduce per wafer. So per wafer means, shortly spoken, per chip, by 8.9% against the previous year. Actually, they fell short of their goal. So their goal was to reduce by 10%, but they actually only reduced 8.9%. So they reached 90% of the target, which is not optimal, but yeah, also not too bad. Executive bodies for addressing water stress. The company has multiple such bodies. One is on board level, and they also have a CSR committee, which is good. Could be better, but yeah. Then the water efficient production processes. So here I think there is something interesting, because the company is currently planning a facility that can recycle water, which was already used in the production of microchips, and then reuse it again in this production of microchips. And this is currently not possible. So this has in the past has not been done. So if they manage to do this, this would be number one, would be a world first. And then number two, their projection is that they would significantly reduce their water consumption. Of course, this is something which, if I would make an investment case, I would further check how realistic is this, and would, even if it works, would this have a significant impact on the water usage? Geographic water stress exposure. Here I did internet research, and then you quickly find out that over the past 50 years, the frequency of droughts has stayed the same, but they are more and more severe due to climate change. And just recently, there has been the biggest drought in record. And this is basically because in Taiwan, usually you have typhoons. Typhoons are actually good for replenishing the water reservoirs of the island. If they fail to happen, these typhoons, which due to climate change, they also are less frequent, then in the following summer, you will more likely have a drought. Okay, then I look at the water consumption. Consumption here is trending downward, but you see this is at a very, very small scope. So overall, I would say water consumption is more or less constant. It has even gone up in the last 2 years. I would take this as a neutral. Then controversies. Yes, I previously mentioned there have been distribution conflicts in Taiwan. The Taiwanese government shut down irrigation systems allegedly. So they said it's more important to give water to the chip manufacturers. Again, 90% of microchips worldwide are produced in Taiwan, and it's less urgent to give water to farmers. And of course, a follow-up question to answer would be, okay, are there any legal steps the farmers can take? Would be legal fallout likely or not likely here? And then I think this concludes the data collection part. And then I go to the inside part where I simply sum up this more or less the data points, and you come to a short conclusion that you then can reuse in your investment case to give a high-level overview of this key issue. And it's like this. So water stress is important in Taiwan due to, you can see this in the recent drought. TSMC has good measures in place to mitigate this risk. The water efficiency has remained constant, and then a game changer might be this this plant that can recycle water, and this is something we would further need to look into. Okay, then this concludes basically the dedicated research section of this presentation. And then we would now maybe make a quick session for questions related to this. And then I would go to discuss icon / workspace. So those are very similar in the next part.
Thank you, Nico. Thank you, Sebastian. So we do have a few questions. The first one, how much is your focus on identifying ESG risk as opposed to efforts to mitigate ESG impact by the firm?
I think, I mean, let me try to rephrase the question. For our daily work, it is mainly on the second one, I'd say. Nevertheless, the time well spent is, if you have an hour, you probably want to spend 40 minutes on the first one and 20 minutes on the second one. Because if you spend the other way around, you might spend a lot of time in figuring out what they're actually doing and then realizing that it's not that relevant. And that's a little bit what actually happens, especially out there at the moment, right? You have a lot of companies and also financial institutions which are really good in communication around sustainability. And you have a lot of companies which gonna tell you really nice stories about whatever topic. And this sounds might sound extremely nice and that they're doing a great job and so forth. But if you have this perspective of figuring out what's material for that company and what's not, you can call out, sorry for the word, bullshit quite easily. And that's I'd say is the most important thing at the moment to do that. And we see it literally in our daily work. With a lot of sometimes funny and sad examples where you have companies which, I don't know, have a huge greenhouse gas footprint or
Fairtrade coffee at
exactly,
gas station.
Exactly. For example, I'm not kidding. This is literally a case where the company reports its main business is having gas and providing gas in gas stations. And the thing they report on their sustainability report and platform is about that they serve fair trade coffee within that gas station, where you think, oh, that's nice, cool, right? But it's just not, it's literally just doesn't mean anything at all whatsoever. So I'd say at the end, we spent more time on the second one, but because we have really good data providers, there's really good research out there, there are really good methodologies out there already. You still need to adapt them case by case. But if you don't have anything, spend it on the first one.
Thank you. How much time on average does it take you to go through this whole process for a new company?
Well, this highly depends on the company and obviously the information you have available. On the one hand side, and that's Sebastian's expertise, we have a lot of good data providers with lots of different data, and we build different models so that we don't actually have to do that quite often. So meaning that if our portfolio managers come to us and say they want to buy or are thinking about to buy that stock, we have actually quite a lot of data which we can already work on. We already have an assessment how sustainable they are, which key issues are relevant, how they perform on different key issues and so forth. But sometimes we also have to do all the work by ourselves, which we call manual rating. So a PM comes and says, look, I think this company is really interesting, or there was an IPO and we don't have ratings yet and so forth. And then we need to go through the process. And again, there it's really hard to say. But I'd say easily half a day. And then depending how big the company is and what information you have and so forth, sometimes it can also happen a day to have that.
Okay, thanks much. Is there any help in assessing which topics are material for which kind of company, or is this just based on common sense?
That's what we actually tried to show you here, that you have on slide, I don't even have a number on that one, but on this slide you have the 3 different sources for figuring out which issues are relevant material for the company. These are these 3, and these ones give you a good indication.
So if you have a company that is in chemicals, then you could just follow this link. The link will bring you to the SASB website. Then you go into chemicals, and then here it is highlighted. So according to SASB, they think GHG emission is very important. However, ecological impact, and there will be a definition also on this website, would be considered less important. And yeah, so that's easy way to have 5 minutes, then you have a first idea.
Exactly. And then this is relevant, and obviously you also want to be able to compare these companies to their peers. So it makes sense, and that's with most of the data providers, that the companies which are similar in the same industry have the same key issues, because you also want to compare them to each other. But it doesn't necessarily mean that the topic has the same relevance for all the companies within the same industry. Give you a really easy, good example. Quite some cannabis stocks are by MSCI defined as pharmaceuticals. The key issues these cannabis stocks actually have compared to a proper pharma company like Novartis, Roche, and all the big ones, totally different, right? So then you want to adapt these things. This is an extreme example, but also in a smaller part, you want to adapt them a little bit more in a qualitative view and take that into account.
Okay, thanks. And just, okay, 2 more questions. And now putting you on a spot here. Are you available for students to connect with you on LinkedIn? Maybe they exchange a few questions.
Absolutely. Go ahead.
Good. And then the last one, how you integrate your ESG analysis into the company evaluation?
Maybe, yeah, so our equity team and we did a lot of research in the past on this topic. And we are currently working into actually integrating this in our discounted cash flow model. And I don't want to go too much into the technicalities here, but as a rule of thumb, we can tell you that a very, very good ESG scoring could lead to a premium of around 10% onto the fair value of the company that comes out of this model, which is not super high, but it's significant.
Important there to understand. First of all, we do calculate this as sustainable fair value, but there are 2 things to understand there. On the one hand side, when financial institutions talk about integration or sustainable integration of ESG, there are always, let's say, a little bit 2 levels. On the one hand, it's the integration level in the process of in the investment process. And this just can sometimes, and quite actually a lot of them just claim that they do integration, but at the end it just means that the PMs have access to sustainability information, and that's about it. Kind of that, okay, the PMs can figure out by themselves. We have a fairly dedicated process, which literally from every investment step we integrate that. And then there's the more narrow definition where the question is targeting it in what model you take what numbers in. And this is extremely complicated because it really depends highly, as you can already see with this materiality discussion, on what issue, what country, what industry, what company, and what key issue. And doing research on that, there's a bunch of research around on how sustainability factors influence performance. They're quite often fairly broad, and then you can go a little bit into more depth. For example, we have done a research paper a couple of years ago, which also published on tail risks and which key issues are a good predictor for tail risks or are closely correlated for that one. And hence we're using this to calculate tail risks for these companies and so forth. But you have to go really, really specific. And that's the one side. And the other side, the tricky part of that is around this discussion where it does count in. With everything, we always have backwards looking information, right? And the relevant part in sustainability to understand is that society, the needs of society and politics and consumers and the view on certain sustainability issue is changing. And if you try to figuring out how important greenhouse gas emissions for a company is, and you look at the data over the last 10 years, it's probably going to give you the wrong impression what it's going to mean for that same company for the next 10 years, because pressure there is mounting rapidly. Obviously already have done over the last 5 years, but it's going to increase massively more. So that bringing that forward-looking perspective into account in these models is extremely difficult.
Okay, great. Thanks so much. So we don't have any further questions.
Okay.
If that's okay for you, it was a pleasure. I have to jump off to another meeting, and I leave you in the very capable hands of Sebastian. Thank you.
Thank you so much, Nico.
Thank you. Okay, great. Then I quickly stop sharing the slide deck and start sharing the application from Icon. So Icon is one product from Refinitiv and Workspace is another product from Refinitiv, and both have this ESG overview, which I described. So if you have either access to Workspace or access to Icon, you will look at the same interface for this context. Okay, so you pull up first a company. I stay with the company that Nico discussed, Sealed Air, and then and then you click on ESG, and then a ESG section will open up. And this ESG section contains 4 views, which you can see here. One is a statement view, one is a peer view, a report view, and a chart view. And those 4 views and this Icon interface allows you to do ESG research at scale. So here you have a lot of data points. You don't need to research anything. So this is a very quick way to get a first overview. Might not be perfect, but to get a first overview of where does the company stand, what are the material issues, and specifically, how do the peers look? How does the company look against the peers? Because this is something which, of course, due to the research approach in our first presentation, of course, maybe came a little bit too short. So I will quickly walk you through the main features of this interface. So the statement view contains ESG data over time, and the statement view itself is split up into pillars, the pillar ESG, and then controversies. And every statement view, be it environment, social, or governance, first starts out with the same set of rows. So first you have an ESG combined score, then you have an ESG score. The difference between those scores is that the combined score takes into account the ESG score and the controversy score here. So a controversy score of D and a pure ESG score of C+ lead to a combined score of C-. So we can later look into the question if this makes sense. But for now, yeah, let's just take it as it is. And then here, the following data points. Here really it splits up what actually makes the E-scoring of this company. And if I go to social, then you will see again, we start out with the same rows. So top level rating here. Here we have the combined ESG score. Here we have the controversy score. Everything looks the same. But here, the scoring here only relates now to social. And then when it comes to materiality, here you can also see, okay, in this Refinitiv ESG scoring system, which pillar is considered most important for this company. In this scoring system, it's the social pillar with 40%, but environment only closely behind with 36% weighting. And then governance has a comparatively lower weighting. And now what I would like to do is have a look at a different view, which gives us here, that's the chart view. The chart view also gives us a nice overview of the materiality. So here you can see the split weighting and then see the next level below this. And then there is a data point level below this. So environment is a category. Those are also categories. And then here are the actual underlying data points. And there is a way to look into this scoring. Yes, it's like this. So I'll show you again. So you start out with a top level ESG score. What are we interested in? Maybe let's stay with water, which I did for my case. So water would be in the environment section, and then there it would be probably in the resource use section. And then here there we have it. So water use to revenue USD $1 million. That is the water intensity. So, and on this metric, the company scores very high. So the scoring would always be between 0 and 100. And that's a percentile ranking, what they use. So the company is in the 98th percentile. Currently, we don't know what is actually behind this. So what's the level of this score? This is maybe something that we want to know. We would also want to know, okay, how do our peers scores on this metric? And how has this metric developed over time? And we can do this by going to a different view. So I go back to the statement view. Then I go into environment because we now want to look up the water intensity of the company. Here, this symbol indicates that the score is used for the actual ESG calculation. This score is available, was reported, but is not used in the calculation because it's not considered to be material by this methodology. Okay, I only show material scores and then find the water score that I'm interested in. So total water use per millions in revenue. So this is a normalization that is done, because looking at absolute would not make many sense, because if we have two different companies of different size, then the metrics would be very much distorted. So dividing by revenues is a nice way of making a comparison on a level playing field. And then here is the actual score. So the actual score is 0.33. I remind you that in the presentation for semiconductors, the score for this metric was around 1,800, so much higher. So now, based on these two data points, we would come to the conclusion, okay, sealed air, as well as the packaging place, the packaging sector, has a lower water intensity than a company from the semiconductor space. Is that true? I don't know. We could maybe look at peers, and here's this nice box. And then you have a peer comparison on this metric. So now you see here is sealed air. And here you have a number of other companies from the same industry, so packaging companies. And you see they all have a very much really thousands of times higher scoring or higher water intensity than sealed air. So here I would come to the conclusion, okay, either sealed air is doing something very special, or of course there could be an error in the data entry. So this would be something that we would have to follow up on. Otherwise, our conclusion would be, okay, sealed air is a best-in-class company when it comes to its water intensity. And maybe you can overlay this on the cost of the company and then integrate this way in your DCF model. Then I quickly go into another view. I go into the report view because this is so the report view allows you to make your ESG report in a matter of 5 minutes. Here you have all the scoring, and then here you have a section where you can enter your ESG summary. So we could just write something and then save it, and then later edit, and then later output it as a PDF here. But the nice thing about this view is that you can very easily drill down on developments over time. What I want you to show here is year-over-year ESG performance attribution. This is quite nice because it shows you, or let me put it like this, often we as analysts say, yeah, the company improved its overall ESG rating. And then the portfolio manager would say, okay, why is that? And then you need to give them a very concrete answer why this is the case. And you have tens, maybe 20 data points that go into the scoring. So this can be challenging. And here you can do it easily. So you can say sealed air improved its overall ESG score here significantly from the last year to this year. So they went from 40 to 48, which is not nothing. What's the main driver behind this would be the question. Then you can go and say, okay, let's have a look at a sub category. So here it's split up into E, S, and G again, and then into resource use, emissions, and so forth. Let's look at one of the categories that has a high weighting and also a big change. And then we end up with human rights. Human rights is together with management, they are the two highest rated categories in this scoring. And they made great progress on this key issue. So what we say is, okay, our main driver in this improved ESG scoring comes from the category of human rights, and specifically, then you can go down, look at human rights, and specifically was caused by the company adopting a freedom of association policy and a child labor policy. And adopting those two policies pushed their score higher. And I think if you now have specific questions regarding the interface, then I'm happy to go into this. Otherwise, I think that's a first overview of the tool, and I would conclude. If our moderator is still there.
Yeah, I'm there. There are no questions.
Good. Okay. Good. Then if you don't have specific questions to the tool, then I think that concludes our session.
Actually, I have a question.
Okay.
If students can please raise hands if they already have access to Icon or Workspace. If you do just a reaction or something. Okay, some of them do have access. It's good.
Okay, I really can recommend it because as I showed you, you can go from the top score, get an overview, how does the company stand in its industry, and then really drill down to the underlying data points. And I think that's a very fast way to do some research. And then later, look at weak points, look at strength, and then do further qualitative research on those.
Okay, so I also see that some students don't have access. So I'm not sure if you have already registered via CFA Institute. So during the kickoff meeting, there was a slide with the link where you have to register with CFA Institute, and during the registration process, you can click if you want to have access to Refinitiv Workspace, and then you will get access in a week or two. Okay. Okay, but it takes some time. Okay, it will take, as CFA Institute mentioned, a week or two. Okay, good. So are you sure you don't have any questions about the tool or any other questions for Sebastian? Okay, Sebastian, you did a great job, apparently.
Okay, thank you very much.
Thank you very much.
Have a nice day, and if you have any questions, yes, feel free to reach out to us via LinkedIn, for example.
Perfect.